All these earning moves obviously need to be discussed in great detail. We got time for another one to focus in on in a little bit more detail here with Qualcomm, because that company, of course, delivered its results as well. Yesterday, they were a little softer than expected, at least on the revenue side. They missed on the top line there, with revenue coming in at $8.23 billion versus the $8.27 billion analysts were bracing for. Chip demand surging. Qualcomm said it was supply constraints that held them back, with the stock nearly giving up today the entire 10% run up over the last month heading into earnings. So the question becomes, is now a good time to get in? And joining us to discuss that is Futurum Research Analyst Daniel Newman here, who joins us now. And it's interesting, Dan, right? Because, the chip space is so hot. So anytime that you see a little hiccup here, you start to focus in on the problems. But you seem to be a much more rosy picture here on Qualcomm. Talk to me about maybe what you made of the quarter.
So, as I looked at the numbers, and first of all, thanks for having me. There was a lot of strength. There was a lot of positivity. So the immediate negative reaction kind of made me take a pause. And if you just look back a week to what happened with AMD, you saw similar record revenues, a huge year, and then the stock declined after it reported. I think there's this little bit within certain segments of the market, and we've seen this across big tech. Apple recently had a $100 billion quarter, then a pullback. There seems to be this sort of buy on rumor, sell on news thing with big tech, where it runs really strong to earnings, and then earnings come in mostly at or above expectations, and yet the numbers on the stock start to fall. And I just overwhelmingly felt that the numbers were good. You saw 63% sales growth year over year, earnings growth of 119%, and the miss on revenue was such a small miss. The demand was really the factor there. 5G is hot. And a great thing that I saw was you look at IoT, automotive, and their RF front end business, which are these three new adjacencies that the company's really just started breaking out. All of those numbers were up over 40%, including the RF front end business up over $1 billion for the quarter, over 100% growth. So the company's doing really well. And I feel like this was more emotional. It's more of a trend of these sell-offs on earnings, where there's all these big run-ups in some of these tech companies.
Yeah, there's a lot of emotion behind the trade. If you look at the stock falling, 9% in the session right now. You talked about the huge expectations that have already been baked into some of these tech stocks. But today we've got this note out from Citi downgrading Qualcomm, saying that the 5G upside is over. It feels like we're just getting started on 5G. I mean, what do you make of that commentary, and what are the opportunities you see for Qualcomm?
Yeah, that's a great question. I read the note from Citi, and I read that it was sort of following that 4G cycle where the margins started to depreciate after that initial surge. I feel like it's still really early days to start suggesting. I mean, we have a forecast of nearly double. I believe the number of shipped units in 2020 that Qualcomm put out was something like 225 million. And they're looking at a number around 500 million 5G devices in 2021. So I feel like the surge, you're talking about 100% growth. I just don't think we're far enough along in the game to start seeing meaningful depreciation of margin. And if you actually look across the board, I mean, the margin on revenue across both the technologies and the licensing business were up. So I feel like it was a little speculative, a little early. 5G has a multi-year runway. I think we're at least 1 to 2 years away before even starting to think about maturity, not to mention 5G and its applications across fixed access networks, across automotive and smart cities. There's so much more that 5G is going to be a part of than even 4G was. So the opportunity is a lot bigger. I feel like it was a little bit speculative, but I also noted it wasn't like the Citi downgrade was to sell. It was more of just to hold. And maybe that was a reflection of that really strong run up to earnings and that sell that ensued thereafter. But my overall feeling was, with the growth in revenue, especially in technologies, the adjacencies and the strength there, an overall big revenue growth as a whole, there's a lot to feel bullish about. And I just felt that sell-off was more of this kind of, emotional selling that's been happening at earnings for a number of tech companies that have shown great results. And specifically, I noted Apple and AMD as great examples over just the past week or two.
Well, let's put it into context too, because I know we were chatting last time you were on. We were talking about Intel, another chip maker out there who's had their own struggles with kind of supply constraints. And if it is true that we are seeing demand, and you buy into the idea that demand's going to continue here with the 5G strength that you're talking about, what would you make of maybe how Qualcomm fits into it against the other chip competitors there? Because obviously, if everyone's dealing with the same supply issues, that's one thing. But if there's something that sets Qualcomm aside from the competition there to build out and maybe overcome those things, that would be important to stress here. So talk to me about how it shapes up against the competition.
Yeah, it's a great question. Intel, of course, does a lot of their own manufacturing. In fact, largely all of it, with a few exceptions. Qualcomm works with partners like Samsung and TSM. Very different, but of course they're sharing with other chip makers and having to access all the supply that is available. I had the chance to talk to both Cristiano Amon and Steve Mollenkopf after the bell yesterday and just get a little bit more background. And the overall sentiment is bullish that their companies are working on handling these supply issues, that as supply constraints are lifted, the revenues are going to peak. There's a lot, like I said, to be encouraged by. Of course, we've seen how supply constraints can certainly hinder markets, PC markets, device markets, smartphones, as we're seeing right now. But I think that's exactly what the company's working on. And now that we're seeing the transition with Cristiano Amon moving into CEO, you've also seen the tailwinds that have come to Qualcomm from the end of a lot of regulatory battles that the company faced. The FTC, the battle that it had with Apple, and was able to overcome and continue moving forward. Those being in the background, I think Cristiano Amon's going to be able to come in, focus on the adjacencies I mentioned, and focus on these supply constraints, because that will be the biggest thing. If there are challenges in overcoming those supply constraints, they're going to continue to struggle to hit the full 5G wave. And that 5G wave is the opportunity. And if you're investing in Qualcomm, you're certainly looking and saying, how big do I believe 5G can get? But if you're investing in 5G, it's hard to argue there's a company that is in a better position to benefit from 5G's expected explosive growth.
Daniel, let's talk about the China play for Qualcomm, because Qualcomm took a big hit on the back of U.S. sanctions on Huawei, particularly their market share over in China on the smartphone chip market. We don't know which way this is going to unfold with a new administration over in Washington, but how much more pain is there to come for Qualcomm, at least in that particular market?
Yeah, this is an interesting situation that's coming up, because Huawei has a number of challenges too, as constraints. So with Qualcomm supplying Huawei, there's going to have to be somebody that will supply all the backfill for all the devices. So I think it was something like, I'm just trying to pull it, but like 160 million devices. 230 million was the number of Huawei devices last year. And so there's something like 16% of the addressable market that Qualcomm will be able to compete for. Because with the lack of ability for Huawei to produce chips based on the sanctions against them and the supply constraints that are going to come from that, this actually could become an opportunity. And that was exactly what Amon and Mollenkopf referred to in the call. So it's kind of being looked at as it's up in the air. The regulatory space is changing very quickly. But Qualcomm actually sees what's going on in China as an opportunity to partner. And in the last quarter, Qualcomm and Huawei worked out their licensing issues, and that was something that was able to be announced. So I think the companies could potentially end up working more closely together, and this China headwind could become an opportunity. Of course, this changes so quickly, and this is going to be a situation that investors and people paying attention and following and tracking Qualcomm are going to want to watch. But the indication that I got, and my sense from what I listened to and what I read, is that Qualcomm is approaching this as an opportunity to address as much as 16% of that TAM, or those 230 million units that Huawei shipped last year.
Interesting to hear you walk through the thesis. Also interesting to note that this comes not only as Qualcomm's dealing with that power change, but also as Intel does as well. Definitely interesting times in the chip space. Daniel Newman, Futurum Research Analyst, appreciate you coming on to break all that down for us.